Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are looking at some great growth stocks right now that could be a potential buying opportunity for you. However, before you buy any of these companies, always make sure to do your own research. I am just pointing out these companies for you to potentially add them to a watch list so you can determine if these growth companies are right for your personal investing style and your personal portfolio, because I think these companies could be very valuable depending on your investment objectives. In this video, we're going to look at Atlassian, ticker symbol TEAM. We're going to look at Airbnb, ticker symbol ABNB. And lastly, we're going to go over the various metrics and financial metrics for Teledoc Health, ticker symbol TDOC. So for more videos like this one, remember to go and smash that like button right now. Subscribe if you are new. Comment your thoughts down below about Atlassian, Airbnb, and Teledoc Health. And without further ado, let's jump right into today's stories. So first we have Atlassian, and the current stock price trades for around $300, which is very cheap because the low-end 12-month analyst price target is $330, and as you all know, I love when the current stock price is actually trading below the low-end 12-month analyst price target, because this gives us a fantastic buffer and margin of safety, which means that this company is technically trading at a discount below what professionals think that the company is really worth. However, the average analyst price target for this company goes as high as $422, while the high-end bullish price target is $600 per share. Currently, 24 analysts cover this stock, with 18 of these 24 analysts saying that this stock is a good buying opportunity, and 6 of these analysts say to hold the stock, while none of these analysts either say that the stock is going to underperform the overall market, and of course none of them say to sell the stock. If you didn't know, Atlassian is a software as a service company, also known as an SaaS or a SaaS company, and they are focused mainly on connecting organizations to both their professionals and employees as well as their customers. So their software helps these organizations run their daily operations, their marketing, their human resources, and of course their software development, among many other things. Right now, the current TEAM stock price is up 915% as of right now over the last 5 years, and that is absolutely insane. However, despite this stock price appreciation, which is absolutely phenomenal, is this company a good buying opportunity? Well, of course it always depends, but just based off of their historical data, this graph looks absolutely phenomenal, and it actually goes to show us that the stock price could continuously climb even past this. However, ideally, we would want to snag this company at around $280 if we could. However, according to analysts, anything below $300 would be a good buying opportunity. So let's discuss more things about this company. We're going to be going over the pros and cons, but I want to start off talking about their main platform, which is Jira, which I actually have many associates that use Jira, and Jira is the #1 operating tool for software development teams. Atlassian products have attracted around 226,521 users in total, and the company is right now very focused on bringing in as many customers as possible into the cloud. In fact, their cloud has grown so much that it's actually bringing them in the majority of their overall revenues. For instance, in the second fiscal quarter of 2022, their cloud revenues increased by around 58% according to this Motley Fool article, which is absolutely fantastic. Now, what I want to point out to investors is that recently the stock price has actually declined by around 37%. So clearly the company is downtrending right now, which means we could get a fantastic buying opportunity. However, because the current stock price is downtrending, that's not to say that it's just going to all of a sudden stop. This stock can continue to fall even lower, so please make sure of that and weigh your risk properly and manage it correctly. Now, I do want to say that analysts currently forecast that the company will generate around $2.7 billion worth of revenues for the fiscal year of 2022. And that is absolutely amazing that this company is bringing in billions of dollars worth of revenue. However, I want to point out that their total addressable market, they are only scratching the surface of it, because their addressable market is as large as $24 billion annually, and it's continuing to expand. However, I do want to caution investors that the current market capitalization and the market value of the company is around $78 billion. billion. And I want to point out two things. I do want to point out that the PS ratio or PS multiple is rather high, coming in at around 28 times. Because the company is worth $78 billion, however, they're only bringing in around $2.7 billion worth of revenue per year. So clearly, investors are thinking that this is going to continue to scale upwards, but that is yet to be seen as of right now. Lastly, I want to point out that the company is literally worth more than their addressable market right now, and we really don't want to see that. However, with that being said, the stock price has absolutely been on a tear lately, growing almost 1,000%. That is insane. This is literally a company that has 10x'd if you invested 5 years ago. So really good on this company overall. However, I just wanted to point out the bullish and bearish perspectives of this particular company, and I hope that you can at least do your own research or at minimum add this company to a watch list, just because the stock price appreciation has been absolutely phenomenal. However, this is going to lead us into our next stock pick, which is going to be Airbnb, ticker symbol ABNB. And if you didn't know, Airbnb is a company that operates an app where you can rent out spaces from what's called Airbnb hosts. And this has put a huge hurting on the overall hotel industry. Currently, the company trades for around $171 per share, while the low-end analyst price target for the next 12 months is $150. The average price consensus among professionals is $200 per share, and the high-end price prediction is $250 per share over the next 12 months. Right now, 40 analysts currently cover the stock, with the majority of them actually saying just to hold the company, and right now is not a prime buying opportunity because 21 analysts say to hold the company, 16 analysts say to buy the company right now, but 3 analysts actually think that this company will underperform the overall market over the next 12 months. Airbnb has around 4 million hosts and a plethora of various locations. But what do Airbnb's financials look like? Well, if we look at their gross booking value for 2021, they had around $47 billion worth in gross booking value, which is amazing. So the more hosts that Airbnb has on their platform, the more potential places there are to stay for these people to stay in these host accommodations. And as time goes on, the demand for both hosts and places to stay are increasing very rapidly, and it's anticipated to continue to grow over time. However, if we look at the stock chart, we can see that actually I think that this company could end up cooling off here soon. I don't think we're going to see any giant surges in the ABNB stock. However, that's not to say that it could happen. That's just my personal opinion. And although I do think this could be a fantastic long-term buying opportunity, I do believe we could get this company for a little cheaper than what it's currently trading at, around $171 right now. But as of right now, I am not very impressed with the overall stock price appreciation of the overall stock price as of right now. However, I do like the long-term potential aspects of this company. The company also saw a very quick bounce back from its bottom in terms of net income. For example, in Q4 of 2021, they had around $55 million worth of net income, which is phenomenal because before that, in Q4 of 2020, they had a loss of nearly $4 billion, which is crazy. Clearly, the company has bounced back and they are extremely resilient. I also want to mention that this company is actually profitable, which is fantastic news, and they trade at a very high valuation of around $110 billion. Now, although this is very good news, what about the flaws in Airbnb? Well, one flaw that I pointed out earlier is that this company does not have very good stock price appreciation as of right now. It's been mainly consolidating and just being very volatile, but not really getting investors any long-term gains, especially if you got into this company at around $150. The gains have not been that impressive as of late. However, that's not to say that the long-term potential of this company is going to be affected, because I do think that this could be a fantastic long-term buying opportunity, but I do think that we could get the stock price a little cheaper than what it's currently trading at right now, but nibbling at this company could be a good idea. Lastly, this is probably the stock that I am most bullish on this list, and it may surprise some of you, and that's Teledoc Health, ticker symbol TDOC. Currently, the stock trades for around $72 per share, while the low-end analyst price target is $60 for the next 12 months. The average price consensus among professionals is $104, and the high-end bullish price target is $215. 29 analysts currently cover this stock, with 17 of these analysts saying to buy the company, while on the other hand, 12 of these analysts actually say to hold, with no analyst that I looked at or researched said that this this company is going to underperform the overall market, and also none of them said to sell the company. So what does Teledoc do? Well, Teledoc is basically a healthcare company that allows people to have a virtual appointment with an actual doctor or clinician. The company serves many clients, employers, healthcare plans, and various hospitals, and they are very well diversified. Teledoc allows various people to meet with their provider, healthcare provider, or various clinicians from the comfort of their own home by basically just doing almost like a Skype call or a digital appointment, and these are extremely convenient. However, with that being said, Teledoc is not the only major player in this space. However, Teledoc is probably one of my favorite players in this space personally, and I do personally own Teledoc. Teledoc has an immense provider network, which includes around 50,000 medical professionals with various expertise in around 450 subspecialties, including acute care, mental health, and specialty care, along with management of chronic conditions. Teledoc also has fantastic fundamentals and financials that we will talk about in a moment. And I personally think that this company is oversold right now, or at least at a good buying opportunity, because it's basically like we're going to buy this company back in 2019, and I honestly think that this giant downtrend is unjustified in the stock price right now, which means that we are getting the stock at a very good discount, and I think that it has fantastic future growth projections and a very good stock appreciation trajectory, because this is overall a very positive trend. I also want to mention that Teledoc has powered around 15.4 million visits, which is actually an increase of around 38%. This means that Teledoc's platform is gaining mainstream adoption, and this is also reflected very positively in their revenue, causing it to surge by around 86% up to $2 billion. The company also generated around $130 million worth of free cash flow, which is a giant increase from their loss back in 2020 of $80 million. This is also very good because the company's market cap and valuation is only around $11 billion, which means that we can buy this company at a very decent PS ratio or a 5.7 times sales, which is extremely competitive, particularly in the space that they are in. Also, the company has a fantastic addressable market. The total addressable market for Teledoc Health is around $261 billion, and right now the company is only worth around $11 billion. So if they can get just a little more market share, this is going to cause their overall stock price to absolutely explode, which is why I personally own this company, and I am very bullish on this company and their future growth trajectory for both the company as a whole, their stock price, and of course their revenues. Traditional doctor's office visits can be very intimidating and very inconvenient, but the ability to do it from the comfort of your own home is not only non-intimidating, but it's also extremely convenient. I also think that Teledoc has a very competitive overall portfolio with the clinicians and specialties that they offer in this particular space, and that's why I am bullish on Teledoc, and I think it's a fantastic long-term investment. But I would love to hear your thoughts down below. Comment what you think about these three companies, subscribe if you are new, smash that like button if you haven't already, and I will see you in the next YT video.